guys, welcome to Trader Rick's video. This is my first video. Today we will be covering a series of like my trading, how I trade pretty much, what I use to trade, what technical analysis and price action I use for trading, I guess. Today we'll be looking at order blocks. So pretty much an order block is just like a specific area where there's large market participants like disrupting order flow, I guess. So an example, and it can be seen on any time frame. Obviously the higher the time frame, the more weight it has, I guess. So like in terms of anything, when it comes to like trading, the higher the time frame, the more like reliable and more like the more like strength there is behind that like TA, I guess. So yeah, okay. So pretty much, order block is pretty much when you have an order flow, and it's blocking the order flow. So order flow is when you have like, this. So this upwards movement is like the order flow per se, and you have this blue order block, which is a down move, disrupting the order flow. So this is going up, and you have an order block which goes down, and then price continues to go up. So pretty much that's an order block. It's pretty much when you have price going up, this area blocks it down, and then it goes back up. And this area here is the order block. So yeah. So order blocks can be used as like an area, like a reference area that you're looking for price to either like bounce from or hold as support. So some examples can be, let's drop down to weekly time frame. Examples of order blocks. So price going down. This one's an order block. So you have price as an order block. Okay, so this is the weekly order block. With a weekly order block, with any order block, you can decide whether you want to include, like for example here, just the body of the candle, or if you want to include the whole candle, including the wicks. I've seen either. Most of the time I do just use just the body, but you can use a wick. So here, if you use a wick, you do see rejection. So we go down, right? You have your order flow going down, then the order block goes up, going down, and then we hit the order block, reject, bounce back up, miss it by a little bit, come back down, and then this is where we get our big rejection of the order block, where it moves price lower. Some price drops. We got a big reaction from this order block here, acting as supply. However, order blocks can be flipped. So once we came back here in 2023 in December, started this year, we retested this, rejected. Then we got above the order block, and we somewhat retested it, not really. Again, if you're using like the order block body, like it would have been here, and you could count as a retest, like a flip of the order block and then retest acting as demand. Okay, so with order blocks, it's not a thing where you just buy every time something hits the order block. You have to use it as a piece of confluence, and you have to have other pieces of confluence to match your trade plan, or your idea. So here you can see this is the order block we talked about before. Price, this is a 12-hour order block. Price was going up, pull back, continues to go up. We've been holding this as support pretty much, once, twice, 3 times. Held this area of support. So yeah, but with price like this, you got to look for more than just like for example, to bid this area here, you got to look for more than just hitting the supply, hit the demand order block. You got to look for like SFPs or I don't know, something like that. So for example here, you could consider this an SFP here. That could be a reason to get long. I don't know, break below there, making new lows. So you probably no. Okay, so this was SFP, and then you could say break of market structure here. So you could play this two ways, right? You could enter on the SFP candle, say enter here, stop at the SFP, and then target, I don't know, the highs or something, highs of here maybe. That's one entry place. Otherwise you could enter here, which has higher, like, because you confirmation break of market structure here. However, the risk for reward is just not there, so you wouldn't. It's not exactly a trade I would take. This one should maybe hit TP. Taking out these highs, I guess. TP would be there. Still holding, so this is another example of the order block holding a support. And that being our SFP. Let's speed this up a little bit, see if we get stopped out, or would we have, yeah, so here. So we would have taken profit. So this one, as I said, didn't have good risk reward. This one, however, you would have hit your take profit. Targeting those highs, you could have done as TP2 maybe. But yeah. That's just an example of how you can use order blocks. But not using order blocks just by themselves. You have to have confluence with them. So yeah. Thank you guys for joining in for this for my first YouTube video. This is probably going to be one of many, part of a series, just how I trade. And I'll just show other signals and stuff I use for trading. So yeah. Thanks for tuning in, guys.